At 2 o'clock today, the Federal Reserve will make its long-anticipated major announcement on key interest rate cuts, the first since March of 2020, and the first since the ripple effects of a global pandemic began to unfold. But how much of a cut will we see, and what will be the impact on your bottom line? Joining us now is Jason Furman, who served as chair of President Obama's Council of Economic Advisors, and now he teaches economics at Harvard University. So, Jason, it's great to talk to you. I know it's hard to talk about the decision before it's announced. The market seems to be divided on whether it's going to be, 25 basis points, 50 basis points. Do you think they'll go big, go small? What's your guess?
I think 25 basis points. There's been a lot of signaling in the newspaper that maybe it's 50 basis points. And the fact is, it doesn't actually matter that much how much they do today. What's important is they make it clear, number one, that they're probably going to keep cutting rates at every meeting going forward. And number two, that if the economy really starts to slow, they're willing to do a lot more. And if they do that, that's what has the most important impact.
It takes a while, though, to filter through to your credit card, your mortgage rate.
Yeah, well, mortgage rates have actually come down in anticipation of
already,
this because they knew the Fed was going to be cutting rates. So they've been coming down a bit, but I think they'll come down some more based on this. In terms of jobs and inflation, yeah, that's 6-9 months away. And that's why it's so hard, because the Fed's making a choice today based on where they think things will be 6 or 9 months from now. And they don't no one has a crystal ball.
So all the economic polling indicates that people trust Donald Trump in the political polling on the economy by wide margins. What does Kamala Harris have to do, if she can, to gain the confidence of the American people and of Wall Street that she can handle the economy?
Right. I mean, political advice to her, I don't know, but she has an overwhelmingly strong case. Donald Trump is pushing tariffs that are just insane. 20% on every country in the world, on our allies, on things that we don't even make here in the United States for no particular reason. He is threatening the Fed, which, by the way, is now potentially going to be among the most successful it's ever been in bringing inflation down and doing it painlessly. With the deficit, Donald Trump is talking about much, much larger increases to the deficit than anything she's talking about. So I don't know exactly what she needs to do message-wise, but she does have the facts on her side. He is much riskier for the economy than she is.
It just seems that Wall Street and big business want their tax cuts no matter what, and will ignore a lot of other data.
That's a factor. I think that's part of it. And I'd like to see taxes go up. I don't think we can afford to keep them where they are now. There's some that have been really polarizing, like a tax on unrealized capital gains. I think there's a number of arguments for that. The truth is, they're not going to actually pass it in Congress. I wish they, some days I wish they would, but they're not going to. So, the idea that she's a socialist because she wants a capital gains rate around where it was under Ronald Reagan is just, I think, the wrong way to think about her policy.
Jason Furman from Harvard, thank you so much.